How are you guys? How's everybody? I hope you are doing great. We are preparing, we're preparing everything for you for this webinar, the chat, and everything, so things will look good. Okay, guys, welcome again to yet another event hosted by yours truly, Munther Marji, and of course FX Educast with a generous sponsorship of QTime FX. How's everybody doing? I hope you're doing great. I hope you're ready to talk about the market more and more for today. We are going to spend 3 hours together where I will give you the technical view on the major and most traded instruments and everything you want to know. You can request, of course, any instrument that you want. And my promise to you, as I have been saying for a few days now, is to give you its analysis with a smile on my face. So first of all, I want to welcome everybody who is with us. I'm very happy to be with you for yet another day, another webinar, another event where we will be talking about our favorite subject, your favorite subject in mine, which is of course trading. How's everybody doing? First of all, Bendong, Maisara, Mark, these are new names. I have not seen you guys before, so you must be new to our event. Welcome. It's great to have you here with us. I always welcome new people, new fellow traders who are interested in the market. If you love the market, then I love you. This is what I say all the time. So I hope you will be enjoying this, guys. To people who have been with us day after day, welcome back. We love to have you every day. And to the new people, also we are welcoming you, and we want you to get the best of this. So stay with us until the end of this webinar, and I'm sure that around 3 hours from now, you're going to say to yourself, well, yeah, I'm glad I have watch this webinar. Now I know where are the important levels on the currencies or instruments that I have interest in, that I want to trade, and I know where to get in and out of the market. So thank you very much for being here. First of all, of course, a big thank you to our sponsor QTime FX, who is offering you fantastic trading conditions. And these conditions start with the fantastic spreads they are offering you. Just check these out on the screen, guys. Euro dollar and dollar yen, not even half a pip on both of them. So that is absolutely fantastic. And that's the reason why QTime FX was awarded the prize, or the award, sorry, for the lowest Forex spread broker of 2018. And of course, low spreads with commission leaves you where you are. That's not a real advantage. But when you offer traders to trade with such a tight spread, and at the same time you are not covering, or you are not making it up for you as a broker with commission, then you are offering fantastic trading conditions to people who open accounts with you. And that is exactly what QTime FX is doing. They are offering you guys very tight spreads and zero commission. So you don't have to pay commission at all to get these magical spreads. And you can use them, of course, to achieve profit in any and the smallest move in the market. You can use it with such fantastic spreads. And if that was not enough for you, I know it's enough for me, because I have my account there with QTimeFX. But if that was not enough for you, we are encouraging you to try trading with QTimeFX with a very generous $500 free bonus. And guys, again, as I have said before, this is not a trading credit. This is withdrawable $500 of bonus. So what are you waiting for? Contact us at fx_educast via Telegram, and let's open this account for you. We will be happy to help you in each and every step of the way until you have your real account where you can learn how to trade the market with real money. And as I always say, trading the demo, if you're new to this, of course, I recommend trading demo accounts for a while, for maybe 2 to 4 weeks. This is it. But after that, you do not need to trade demo, because it will not add anything to your advancement as a trader. Why is that? Because without feeling the pressure of trading real money, you are not learning much. This is what I really, really believe in. So when you open your account, a demo account, and start trading there, that's fantastic. Because as a beginner, of course you're going to make mistakes. Even people who are not beginners make mistakes sometimes from time to time. I have been in the market for 19 years, but from time to time, after doing something, I say to myself, oh, that was a mistake. But especially for beginners, you know, they make a lot of mistakes, more than other people, other traders do. And that is why we want these mistakes to be done on a demo account. That's why I really recommend you guys trade demo accounts for a while, if you are new to this, of course. But after that, after a while, you will really, really need to trade real money, because without trading real money, you will not feel the soul of the market, let me say. The soul, the heartbeat of the market. You need to feel it. And when you trade real money, you will be under pressure, because you know that this is your money. You work hard to earn your money, and you are putting some of these funds that you have in the market. And of course, when you start trading, there's risk and there's reward. Any position that you open can go in the direction that you expect, which will leave you with profit, or against the direction that you are expecting, and that will leave you with loss. And this is, of course, reward and risk. So we have risk. I want to talk about risk first. So there is risk, of course, of losing money, and there is the reward of making money. And to deal with this situation on a demo account, if you're new, is a fantastic and great idea. But after a while, you will be trading the demo. You want to maybe test yourself as a trader. You have some strategy that you want to follow. You want to see yourself as an analyst. You say to yourself, well, I'm going to sit on the chart. I'm going to see where the pound is going, and I'm going to initiate a position on a demo account, and then I will come back later and see if my analysis is working correctly, or if I was not right about the market. That's great for a start. But the thing is, when you trade demo, you will not take things very seriously. Why is that? Because there's no real money on the line. So if you lose your whole account, demo account, of course I'm talking, if you lose your whole demo account, what's the big deal? You will open a new demo account, because it's not real money, and then you will start over until you feel that you are good. And this, of course, it is helpful, but without feeling the pressure of real money, guys, without feeling that kind of real pressure that the decision you are making, it can make a difference between making money or losing money. And at that time, when you realize that I am making a decision about making or losing money, and it's going to result in a different financial situation for me, at least for the short term. If I make money, that's great. I can take the wife for a vacation in a foreign country. But if I lose money, then, well, I may have to do something about it, because maybe I'm planning to buy a laptop, for example, and I have $500 in the account and I lost them. Now I say to myself, well, I don't want to buy the laptop now, maybe a little bit later. So when you know that trading can result in these differences in your financial life and financial situation, then you will start taking things very seriously, and you will learn, because with every, you will learn something when it's real money. If you make money, you will remember why you made money, and if you lose money, you will remember why you lost money, and you will learn. And this is how you grow as a trader. Nobody is perfect. Nobody is right all the time. Nobody didn't make one mistake in their trading career. Nobody at all. Even legends had their rough times, and we talked about this many times in previous webinars. We mentioned how, for example, the greatest trader who ever lived, Jesse Livermore, started with a huge loss in the market. He thought that he's the genius that is going to set New York Stock Exchange on fire, and he started with $10,000 his first attempt, and he lost money. Okay, but he came back and he made results. So it's okay to make mistakes as long as you learn from them, because if you learn, then you will grow. Then you will be a better trader today than you were a month ago. And this is what I want you to go through. As a beginner, of course, the first few months of trading are usually very hard. Sometimes some beginners have what we call beginner's luck, but the vast majority of beginners face hard times at the beginning. Now, the difference between the two groups of traders is that after a hard beginning, some people will give up, of course, and they will lose everything. They will get out of the market, and that's it for them. This is their trading career. It lasted for a few months, and that's it. For another group of traders, no, they say, no, I'm going to go back. I'm going to learn how to do this. Like not just Jesse Livermore, but another legend, Michael Marcus. He lost everything at the beginning, and then he made millions upon millions. And that's why my advice to you guys is this. When you start, if you have $10,000 set apart for trading, don't put them all in your account immediately. Start with a small portion, of course, after trading demo for a number of weeks, but make that 6 months or something like that. That's too much for demo trading. Some people do that, but that will not be very helpful. I wanted to trade demo for 2 to 4 weeks. This is my ideal period for demo trading. After that, open a real account with maybe 10% of the money that you want to invest in the financial market. Don't put everything in at your first attempt, because your first attempt will be full of mistakes. Okay? And after a while, when you see that, well, I'm surviving, a lot of beginners, they lose everything they put in there. But, I have been in the market for 3 months. I started with $1,000, and now I am at $1,003. So you're surviving. Even if you are at 900, 850, you are surviving. For a beginner, that is okay, because a lot of beginners face much harder times than that. So when you say to yourself that, yeah, I'm surviving, and I'm doing good. Sometimes I make money, sometimes I lose money, sometimes my trades hit the stop, but sometimes my trades hit the limit, then you are ready to put all the money that you want to invest in the financial market in your real account and start a real exciting journey from there. And of course, we want you to open that account with us, with QTime FX, with FX Educast, because we really care about you, are giving you fantastic trading conditions. And as you know, QTime FX wants you to know where are the good levels in the market, where are the important levels in the market, so you can make money
and that is why they are sponsoring these webinars. Okay, guys, so show them some love. Contact us at fx_educast via Telegram, and let's open this real account for you right now. Another viewer, Mauricio, how are you, buddy? I hope you're doing great. Any questions about the account on chat, of course, will be answered by our staff, FX Educast. The guys will be there to help you. So please ask anything you want about the account, about the market, about trading, about the bonus. We are getting a lot of questions about the bonus. So go ahead, ask us for that, and we will be here to help you with every step of the way. And we will answer every question that you may have. I will answer questions about the market, and the staff from FX Educast will answer questions about the accounts with QTime FX. So with this out of the way, let's start analyzing the market. And of course, as you know, if you've been here before, you know that we start with this baby, the euro. And for days now, even when the euro was very close to its 2-month high, when we were trading here, we said that there's a chance of going lower again to this area. This was heavily expected. And for the past few days, we have been finding support extremely close to the bottom of the area. Earlier, we found support sometimes close to the top of the area, like October 28th, October 30th, something in the middle like October 29th and 27th and 25th. But recently, or this week, let me be more specific. This week, we are testing the bottom of this area, not the top of this area. And as you saw earlier this week on Tuesday, I think it was the first time that we have reached the bottom of this area. The daily low was 62. And on Wednesday, which is of course yesterday, we also had a low of 63. Just look at these lows, guys, and compare them to the bottom of the area, this support area, which include 3 levels. It is built between 3 retracement levels. And as you can see, yesterday and the day before, we had the daily lows extremely close to the bottom, which is this red horizontal line here. It is 1063, of course. This is the bottom of the area. But what happened during today's agent session was that the price dropped to levels that are below the bottom of this area for the first time since, let me look at the chart, since October 16th. So that's around 3 weeks. So we saw prices that did not appear on the screen for 3 weeks, guys. But does that have to be something bad for the euro? Well, it depends. You know that we already have a long position on the euro and it's not doing very well, but we did not hit this top yet. So we're still fighting. We are fighting, and we hope that things will turn around before our stop is hit. Our stop is 43. That is, of course, 20 pips below the bottom of this area. And yesterday we talked about, of course, plan B, which is selling in case we break this area. And I deleted, of course, I delete orders that are not hit, that are not activated that are not triggered, this is the word I'm looking for, by the end of the European session. So I deleted the order to sell at 1043, but we do have a long position from early this week. We got in a little bit earlier than we should, and that's why we are still in the market, waiting for that position to give us the profit that we are looking for. Now, the resistance, in my opinion, is also not very hard to spot. It is 70 right now. So all we need to do, 70, well, it is a part of it is at 70. Let me put it this way: the falling trend line from Monday's high, or the highs seen during the American session on Monday, is currently running around 70, and we have one moving average running extremely close to it. Another moving average, the SMA 49, is running around 79. So in the 70s, let's say the resistance is in the 70s. Of course, as you can see, the moving average is lower because recent prices have been lower. So it is normal for the moving average to continue moving to the downside under this recent price behavior. So now I'm gonna put my faith in this trend line, and if the price breaks above the trend line, I will start feeling better about the long position that we already have. We're not going to initiate, of course, a long position because we already have one. Some people may think that that is a good idea. Well, it is very easy to lose control when you do this all the time. Lose control of the whole account. So I'm talking about something that is really risky. If you start to add to your position when the market moves against you, some people, for example, they get in on the long side of the market, they buy something, and if this thing goes down 20 pips, they add to that. So they have one lot at, for example, 1080. If they see 1060, they add to that. And then if the price keeps falling to 1040, they add another one. And maybe at 1030 or 1020 or 10, they add another one. This is the easiest way to lose all your money. Did you hear me, guys? This is the easiest way. If you have an account and you want to blow that account, then this is the easiest way to do it. I understand that sometimes you, after depending on one support, for example, it's an important support, you get in, and then you know that maybe 70 pips below that, we do have another strong support. So you say to yourself, well, I want to be in here, and if we reach the next strong support, I want to add to that. But I'm controlling the risk. If we break the next support, I'm going to close everything. And the maximum number of positions that I'm going to have at the same time is 2. When you have these kinds of rules, then maybe it will be a little bit safer. But overall, if you take this habit of adding to your position when the market is not moving in the direction you are expecting, then you are subjecting yourself to a lot more risk than you should. So it's up to you guys. If you know how to manage your risk and you want to add, I'm not a big fan of that. I have to say that, but of course it's up to you. If you know how to manage risk, then you will be okay. But again, yes, I know that a lot of people say, well, I know how to manage risk on my account, but again, it's very easy to lose control when you keep on adding positions to an initial position that is not doing very well. So do we buy here? If you don't have anything at all, yeah, if we start trading above the resistance, yeah, I recommend a long position. So I'm gonna give a recommendation, but it is going to go out to do not have positions on the euro dollar. Okay, it's not for everybody. The people who are already in, stick with what you have until it is stopped out or it reaches the limit. And after that, you can think of the next trade. But you know, you already have one. That's it. That's it. Calm down and focus on your trade. Okay, guys. So the resistance is at 70. Now the support is of course at 63, but we can use, I want this retracement, I want to show you something. Yes. We are using the 50%, 61.8% to build this support area, which are two of the most important retracement levels there is. For me, there is another level that is sort of magical, which is the 71.4. So I'm gonna use that today in order to build a trading strategy between a support and this is the level I'm talking about. It is, I think, it is 44. Okay, so it is 44. As you can see, this level was a resistance for a short while, for 2 days or so, before it was penetrated to the upside, and now we are going back there. So when you see this kind of situation, then you can depend on these trend lines or horizontal support and resistance lines to build a strategy. And the strategy should be that you are moving with the market in case it breaks one of them. So in my own opinion, this trend line it looks very good. First of all, the slope is very good. It has been touched 2 times and approached a 3rd time, and the price for recent price behavior has been very close to this trend line. All of these points, in addition to the fact that the moving average band is very close to it, all of these points make me feel that this is a good trend line. It's going to be an important resistance, at least for the short term. And if it's broken, then we should respect this break and we should move in the direction of the break. On the other hand, of course, we are testing the key support area, which has its bottom at 1063, but I'm gonna look for the next retracement just below it at 44. And if we break 44 to the downside, that is it, guys. Okay, so I will be recommending you to follow the direction of the break of one of these 2 lines. A break above 70 is a buy, a break below 44 is a sell. And this, again, this recommendation is for people who are flat. You know, you traders who have positions on the euro dollar, just keep following your position, because we already have a position from earlier this week and we are still holding on to it. So let's start by of course, the trend line is currently running at 70. With something like the euro, it is 10 pips to the upside. That is enough. 10 pips above this trend line, in my own opinion, is a reason to get in. Some people may want to 20, and I'm fine. I'm fine about that. I have no problem with that. I'm fine with that. You can use, if you want to be a little bit more careful, you can use amounts for breaking important levels that are more than what am I using right here. But for me, this is what I'm gonna use. Now the stop is going to be below 1044, 1034. How does that look to you? Well, since it's a retracement level, I'm gonna add only 5 pips to that, so I'm gonna use 15 pips to the downside. If we get to the 20s, I want to be short on the euro, okay? Because when we get there, that means that the price is breaking to the downside. It is already below the main support area, which has its bottom at 1063, and below the next retracement level, 1044. So it is obviously breaking levels to the downside. I want to be in that. However, you know, when we are going to talk about the short position, I'm going to show you something that makes you feel that you need to keep your eye on the market all the time if you are on the short side. So buy at 1080, stop 1029, limit. If things go well for the euro, of course, we are expecting the price to go higher towards these levels. And you remember, guys, the highest price seen recently is 1083, which was October 18th, 2-month low. It was the highest price since August. And this makes a fantastic limit for the euro. However, of course, this is more than 100 pips. I know a lot of you guys do not wait for that kind of target. They say, well, okay, 30 pips, that's it, I'm closing. And I have been talking to a person yesterday who has been watching some of my work on YouTube, and he said to me that he usually, when he sees people that give recommendations in trading the market, he noticed that their targets are much lower than what I propose. And he said, well, why are you placing targets at 100 and more pips, even 90 and 80? Why are you doing that? Why don't you keep it at 30 and 40? Well, it's okay if you want to follow these entry levels that I'm providing you with, and you are the kind of person who would be happy about 30 pips, then of course go and close your trade when it reaches 30 pips. Put them in your pocket and enjoy the rest of your day. So I have no problem with that. This is what I said to him. I said, I have no problem with you closing these trades with less profit than we are proposing. But of course, you need to understand that sometimes you're going to be happy about that. Sometimes maybe I'm giving you a recommendation with 100 pips of profit. It reaches, for example, 60, and then it goes back to the loss zone. Now, if you are the kind of trader who will close for a profit of 30 or 40 pips, then of course, you'll be happy. I made 40 pips. The price dropped below the entry level. I'm a very happy man. But of course, that's a good thing. But sometimes the other thing happens in which you are happy with your 30 or 40 pips, and then you see the price reach the limit of 100, 110, 120 pips. And of course, you will not feel as good at that time. So you will need to deal with all these situations, all kinds of situations in trading, of course, where will appear. And the thing is, this is not only about trading, it's not only about risk management, it's not only about pips and dollars, it is psychological. Trading, sometimes you're very happy because of trading, sometimes you're frustrated because of trading, and you need to learn how to deal with these emotional and psychological factors that are playing with you. So if you can do that, then you can do whatever you want. So the bottom line, or the summary of what I said to that investor is this: you can do whatever you want. If you want to close at 30 or 40 pips, it's okay. But sometimes, we are not even going to reach 30 or 40. Sometimes we go into the loss zone straight. Of course, that can happen sometimes. And if the stop is hit, if you are using the same stop that we have stops of 60 to 70 pips most of the time. The ideal area for placing a stop, in my own opinion. Of course, I always refer to the chart before I place my stop, but if it's between 60 to 70 pips, then I would feel very good about my position. So if you are making 30 or 40 on winners and you are losing 60 to 70 on trades that are not doing very well, then your average loss will be above your average profit, and that is not an ideal situation. So we want the average profit to be above or larger than the average loss of your trades on your account. And of course, you can get these numbers when you issue a statement using your trading platform on QTime as the MetaTrader, and then you can check these numbers. You can see your profit factor, your average profit for trade, your average loss for trade, your largest winner and largest loser, and all kind of numbers that will help you estimate what level of trading you are doing right now. And of course, you will be able to see where are the strength points, and you will be, of course, working on them, and where are the weakness points, and of course, you will want to make them better. So, of course, QTime FX is offering you trading via MetaTrader 5. It's a fantastic trading platform, and it makes things easier because, of course, it provides you with reports that will show you where are your weakness points, where are strength points, and then, of course, you will be trading better when you know that I have this advantage. I'm doing better with this point in specific, but I'm weak with that point in specific. So I'm going to be working on what am I weak on, and I'm gonna improve as a trader. Right, guys? We want you to improve. We want you to be better with time. Of course, this is what experience should leave behind. Now, everybody is good sometimes, bad sometimes. You have a great week, you have a bad week. It happens to everybody, even people who have been in the market more than I have, more than 19 years. Some people who have been more than 25 years in the market that I have met earlier in my career, they say the same thing. You have a great week, you have a bad week. This is the phrase that they use. It is a market, which what they mean by that is that sometimes it's good, sometimes it's bad, it goes up, it goes down, and you want to, of course, use these movements to your favor. So yeah, if you want to close your position with less profit than what is proposed in the recommendation, that's okay, but I want you to be careful about that, because we don't want very small profit like 10 or 15 pips per trade, because one stop of 70 pips can take away the profit of 5 to 7 trades if you are targeting 10 or 15 pips, and that will be painful. You say to yourself, well, yeah, I won 1, 2, 3, 4, 6, 7 trades, and then one stop took it all from me. So you are with 7 winners and 1 loser, and at the end of the day, you are not making money. I don't want that to happen to you. That's why I give you these targets, guys, that are 100 or so. But of course, I will take into account that advice of lowering the limits, So an effort towards that, I'm gonna change this to target 1 and target 2. To some trader investors, they find this to be helpful. And I think that what they mean by preferring to have 2 targets instead of 1 is that it's like they are saying to the analyst or the signal provider, well, you tell me what are the 2 most probable targets that you are thinking of, and when we reach the first one, I will make the decision of keeping this trade or closing this trade. So that is why I am going to give you 2 targets. If we keep this low and start recovering, let me see where the 50%. There's a sorry, this is 11, guys, not 10. Of course, it's 11. We're not going to target 3 pips, so it's 103 pips. Now, how about this? The 50% level, do we have previous resistance or support? Very near this level. This is what I'm trying to check. Of course, we do have this one. It's very interesting, but that's about it. So it is 11:14. So I'm gonna issue this signal for people who have no position. Okay, for you guys who are already in our long position, then we are waiting for that position to reach its limit or stop. It did not reach its limit or stop so far, so we are just waiting for that to happen. If it stopped out, we can look for another position, and if it reaches its limit, we can look for another position. But right now, we don't want to add to our original euro position. So this recommendation, guys, is for people who are currently flat. Buy at 1080. Honestly, I really feel that target 1 is very small. It's 34 pips. It's what people like. But it is really small, you guys. I don't know. Can we add something to that? It's a very small target. Can we use 29? Well, 29 looks very nice. Yes, it does. Yes, it does. So I'm going to add 15 pips to that. 29. Screenshot this, guys. Write it down, or go directly to your trading platform, your account with QTimeFX, and place your trade immediately, your order, sorry, immediately. Buy at 1080. We are currently around 20 pips below that. Buy at 1080, stop 1029, target one is 1129, which leaves us with how many pips? 49 pips, that's okay. And target two is 103 pips at 1183. Now, for our current position, of course, we have a stop at 44. If the stop is hit, then we should be thinking about a short position, because that means that this area in the 60s, which provided support for the past 3 weeks, is now broken to the downside, and that is, of course, a reason for more falling, for a continuation of the current drop. So you guys, gonna place a sell order at 29. The stop is at 1080. Of course, you are used to this by now. If we buy, because this level is broken, this falling trend line, if we buy here, our stop should be here with a reverse. Okay, if we sell here, then we should place the stop above this trend line with a reverse as well. That's why you always see this in my trading recommendations. This is what I issue all the time. One entry is the stop for another trading recommendation, and it's like they are mirror image to each other. Let me show you what I mean. Sell as at 1029 with a stop at 1080. Now the buy is at 1080 with a stop at 1029. Okay, let's think of targets. Of course, the first target, I have no doubt in my mind. Let me call them target 1 and 2. Target 1 is 109.95. That would leave us with only 34 pips of profit. The kind of targets that I was advised to to focus on my YouTube working. But of course, I'm going to give you another target that is more exciting than that. And for that, I will need to take a look at the chart. Yes, this is very strong area in the 109.90s, by the way. And if you really need it to show support, I think that it will provide support. It will. For the next target, I'm going to use more than one tool to specify what kind of target are we looking for. Below 109.95, I'm going to use, first of all, the two harmonic ratios that I know you guys love, 78.6 and 88.6, and these are, let me just delete the unnecessary level here. Yeah, they are at 109.44 and 109.14. So 44 and 14. Yeah, that is better, of course, than 109.95. 44 is okay, especially that we have an intraday, or actually this is a daily chart, so this is a daily low here. The daily low on October 8th was very close to the 78.6%. The daily low was 41, while the level itself is 44. And we can also look for horizontal levels very close to this. at the horizon. We do not have a lot of lows here, of course, because in this area, when we dropped to this area, we were trading at a 29-month low, guys. So I think that this is enough with the daily high here, a daily low here, another daily high here, without looking further to the earlier history of trading. 944 looks like an interesting target. 944. So with 944, how many pips is that? It is 85, I think. 50. Yeah, it is 85 pips. So 34 or 85 pips. And this is my recommendations for the euro for today. Short position and a long position. I'm gonna change the color on the long. Yeah, this is how I like it. I use blue for long positions and red for short recommendations and positions that I suggest to you. So you guys, the euro, these recommendations, one last time I'm going to remind you, these recommendations are for people who do not have positions already in the market. So buy at 1080, stop at 1029, target one is 1129, and target 2 is 1183. It's an ambitious target. At the same time, we have a short. If the stop of the long is hit, it's a short position. It's a short recommendation at 1029 with stop at 1080. Target one is 995. Not a lot of profit, but this is what a lot of traders like. They like targets that are not really far from the market. They want to get in and want to get out within a few hours, and I really understand that. I like that. I have zero problem with that. And of course, we have a target 2 for ambitious people or ambitious traders who want more than 30 or 40 pips of profit at 109.44. So guys, I really believe in these recommendations for today. If you are flat and if you are looking for a trade to start trading right now, if you have no positions on your account, then I really recommend you keep your eye on these levels, on these recommendations, on the resistance that is 70 and the support that is 44. Okay guys, so with this we come to our first break. Of course, before I go, we have a question from Azuro. I hope I'm saying that right. How to get the money? How to get the money? I suppose, buddy, you are talking about the bonus. Well, the bonus, you get the bonus when you open your account with QTime FX through FX Educast, and after you do so, of course, you are going to get the money. You don't have to do anything. Just open an account, deposit, and you will get the bonus. Okay, guys. So keep your eye on the euro. For now, we have spent, like always, we spent almost all of the first hour on the euro. And then, of course, after a shorter break of 5, 6, 7 minutes, we are going to talk about other instruments. So I hope I'm going to see you when I come back. And I'm going to talk about other instruments. So please let me know if you are interested in a certain instrument. I know the things that a lot of people ask about every day, because, you know, I have been doing this for a while. So I know what you like, guys, most. And I'm going to go through these instruments one by one. But if there is one of you that is interested in some pair, you already have a position there or want to understand what is going to happen there, where are the important support and resistance levels that you can use to build your trading strategy for the day, then please shoot. And my promise to you is this: I'm going to analyze the markets that you like with a smile on my face. I'm ready to take your requests. So please let me know what is it that you want to know about. For now, it is time for our first break. So we will be here again, of course, after a shorter break. And A big thank you to QTimeFX for their generous sponsorship of this webinar, like they have been doing for a while, because they want you guys to understand the market. They want to show you where are the important support and resistance levels, and they want you to make money. That's why they are offering you fantastic trading conditions with very tight spreads, zero commissions, and a very generous bonus. What you're waiting for? Contact us. Let's open this account for you and start trading, start following these recommendations on a real account, which is, of course, much more exciting than following them or applying them to your demo account. So this is it, guys. Time for our first break. See you in 5, 6, 7 minutes, something like that. Take care, everybody.
All right, guys, we're back after this short break. How's everybody? I hope you had a wonderful break. You had something to drink. You had some time to think about the market. And of course, we spent the first part of this webinar talking only about the euro dollar, the most traded pair, the pair that everybody is always asking me about. And that's why I dedicate a lot of time to it, because I know you guys love it, and whatever you like, I'm gonna do. So of course, the summary of what we said was that yes, we are trading below 1063 hour support, but we did not trade enough below that support to consider it broken, and our stop level is not hit. We already have a long position on the euro, but it did not reach its stop all limits, so we are still in the market. We are still fighting. We are hoping for things to turn around, because at the moment it's not doing very well, but it is still there. Our stop's not hit, so we are still full of hope that things will turn around. The first sign of things turning around would be breaking this trend line, guys, which is currently running around 70. So if we do, of course, we will be ready to take advantage of the break to the upside with our first recommendation of the day: buy at 1080, stop at 1029, target 1 at 1129, and target 2 at 1183. Now, if the other thing happens and the break is going to be to the downside, then of course we will be ready to use that as well, with a sell at 1029, stop at 1080, target or the first target at 995. It's a very, very important level, guys. 995. If we get there, please keep your eyes on the price and see what it's doing. Look for any sign of reversal or continuation, and the move from there is going to be exciting, in my own opinion. If this support survives, it's going to be a very strong move to the upside. And if it's broken, of course, a continuation of the drop will be expected to continue digging deeper and deeper. And target 2 is 944. So there you go, guys. These are my recommendations for the euro dollar today, and they are coming to you 100% free because of QTime FX. That's it. That is why these services, or this analysis session that is, of course, it's not free, is coming to you like this, without the need to pay anything for it. It's because of the generous sponsorship of QTime FX, guys, our favorite broker, who is offering you fantastic trading conditions that start with very tight spreads, and of course no commission to support that. And on the top of that, we are offering you a very generous bonus of $500 withdrawable money, guys, not only credit to trade with, and then it's not yours when you, after that we say no, this is not withdrawable money. This is just an amount that you can trade with in your account, but it's not yours. No, that's not how QTime FX does it. They do it big because they want you to enjoy your trading experience, guys. That's why they're offering you not trading credit, but withdrawable bonus, real money, $500. So what are you waiting for? Come and enjoy this unbelievable offer. Start trading with the broker that was awarded for the lowest Forex spread of 2018, offering you unbelievable spreads, zero commission, and on top of that, a very generous bonus. And if you do, when you open your account today with QTime FX, please follow what we are telling you to do. Follow these recommendations. If you want to place them on your account, go ahead. Of course, always use the right size to trade. Do not use a trading size that does not fit the size of your account. This is a mistake that a lot of people do. You know, they think just because they are getting recommendations from a professional analyst or a recommendation signal service
And of course, there are many services like this, and some of them are providing fantastic recommendations. I hope that I will be able to match that to give you the best recommendations that there is. But if you think that just because you're getting your recommendations from a professional that you can trade sizes that do not fit the size of your account, then you are dead wrong, because even the best professionals in the world, they are not right all the time. Nobody's right all the time. So if you are trading if you are trading a lot size that is much larger than what you should, then one bad recommendation can destroy your account. Do you want that to happen to you? I know that I do not want that to happen to me. So always trade the right size for your account. Trade a size. This is the magical understanding of risk management. Trade a size that if the stop is hit while you are trading this lot size, your loss will be something between 2%, 3%, maximum 5%, and not all the time 5%, okay? So try to always keep the dollar value of your stop at 2 to 3% of your account. And if you lose 2 in a row, that will be 4 to 6, of course. If you lose 3 in a row, that will be 6 to 9% of your account. You're still, after 3 losses, after 3 stop losses, you are not losing 10% of your account. That's a fantastic way to trade your account. Okay, guys? But if you trade a trading size that will leave you losing 20 or 25%, and believe me, I have seen this, 20 or 25%, sometimes 30% with one stop loss. So if you have 2 or 3 stop losses hit in a row, then that's it. Where's your money? Where's your account? You start with 1,000, for example, as a beginner. I don't recommend trading with millions. Down the road, I do recommend trading with millions. But as a beginner, I, of course, recommend you trade with small amounts. And if you start with these small amounts, you start with 1,000. If you use excessive trading sizes, then after 2 or 3 stops from 1,000, you can find your account at 200, 150, 250, something like that. And imagine the feelings that you will feel at that time, the thoughts that you go through on what am I going to do? How am I going to take my account back to 1,000? You will be facing a very difficult time. But if you keep your stop loss at 2 to 3%, then after 3 stop losses in a row, your account will still be above $900 while you started with 1,000. You say to yourself, well, that's okay. I'm still at 900, very close to the 1,000, and I can make the losses anytime. With a couple of good trades, that's it. That's all I need to go back above $1,000. So always, guys, use the trading size that is right for you. When your stop is hit, calculate it. You can calculate it, of course. Please calculate it. When your stop is hit, if that will make you lose 15, 20, 25% of your account, then definitely you are using a much larger trading size than you should. But if the stop, after you place this recommendation, for example, the long recommendation at 1080, you calculate, okay, 1080, I'm in at 1080, my stop is 51 pips. If my stop is hit at 51 pips at this trading size that I'm using right now, how much money that would be? And then you take the money and you divide it by the balance of your account, and you see the ratio, the percentage. If it's 2%, 3%, even 5%, it's okay. If it's above that, then you have to lower your trading size. It's not rocket science, guys. These are very simple rules, but unfortunately, they are very simple, but unfortunately, a lot of people, they say, well, okay, yeah, I understand what you're saying, and then they go and do whatever they want, take much more risk than they should. This happens all the time. I always advise clients and traders, investors who open accounts to keep their eye on the trading size and the number of open positions at the same time. Very, very important numbers. 2 numbers. The first one is that What is my trading size? Am I trading a whole lot, half a lot, 0.2 of a lot, 2 lots? Of course, it depends on your account. There's no one size that fits all. It's not like this here. If you have an account that is $1,000, of course, that is completely different from having an account that is 10 grand. And you need to understand the relationship. And it's very simple, of course. Always calculate your stop as a percentage of your account. If it's large, if the percentage is large, 10, 15, 20%, then no. You have to lower your trading size. But if it's 2, 3%, 4%, then that is okay. That is the right thing to do. Okay, so we're done with the euro. We are done with the euro. These are the recommendations. I'm keeping them all this time on the screen on purpose because anybody who's joining us right now, I want them to see these recommendations. Okay, these are the recommendations for the euro right now. Let's move to the next instrument. How about gold? Let me, I want to use, yeah, we're done with the euro. Let's, the number of viewers is changing in front of my eyes. Welcome, everybody who's just joining us. I'm really happy that you are here, guys. Welcome to this free webinar, live trading and analysis session. These are the recommendations that we have up until now, and now we are moving to gold. Of course, we have a long position on gold, and it's in just a little bit of profit, not a lot. This position is from yesterday. Now, what is going to happen to this position? Are we going to make any changes to the stop or limit? Let's see. First of all, I want to take a look, of course, at the daily chart. This is what I do. The daily chart. Of course, yesterday we talked about the effect of this strong bearish day. I moved to the downside. We were trading above the moving average band, and then at the end of the day, we were trading well below it, which of course favors the downside. But does it have to? Remember, we talked about the importance of the 1480 as a horizontal support. We said that recently we have been finding support around 1480 a number of times. We did so. Before I leave my daily chart, I want to take a look at the indicators. Not a lot of help. No signals generated here after yesterday's close. Nothing. Okay, so I'm gonna switch to the 4-hour chart. And unfortunately, guys, what I'm seeing right here is a sign of weakness, because this recovery attempt, which we were betting on, and it achieved us some profit, is now looking weaker and weaker. Why is that? As you can see, since the start of this hour, the price has been dropping. Unfortunately, this whole move was limited, not the kind of move. Of course, it's more than 100 pips, but this is gold, so 100 pips like 50 or 40 pips on other instruments, because it's a volatile instrument and we expect it to do more and more. So the thing that we want to check here is the retracement levels. At the time, gold is showing weakness, but we are currently testing the moving average band. As you can see, the bottom of this band is around 87.70, which is it's almost exactly the current price. Okay, so we hope that this can survive. First of all, I want to show you why I believe we have a support around 80. As you can see, we have 80.6 on 21st of October, and this Fed low, of course, 80.9. So obviously we are having support very close to 1480. Now I'm going to go even lower than that to the 15-minute chart, and as you can see, this hour is not being very good for the precious metal. Retracements, we are already below that 38.2, so I'm going to focus on the 50%, which we are touching right now, 61.8, and my own favorite, of course, 71.4. From the start of this hour, we opened the hour at 91.6. Now we are at 86.76. So we are already 50 pips below the open for this hour. That's very weak. One tool that I'm going to be using is, of course, this trend line. As we start trading below this trend line, my attention will shift to this level. 71.4 level at 83.5. 83.5. So the first note that I'm going to leave on the chart for you guys is the support. The initial support is at 83.5. Without breaking this support, I don't believe that we should give up on gold. It will be able to fight, able to move higher at any moment, unless we break the 83.5, and of course that is closely followed by the low seen recently, which is 79.2. So above these levels, I do not recommend a short position. As you can see, with the 83.5 is good support. We have intraday levels, the intraday lows that were very close to it. I really believe in it. Here, it's not. There's no reason to sell, even with a break below this trend line. Why I'm saying this? Because the overall picture is that we do have support levels just below this trend line at 83.5 and at 80, or you can consider it 79.2. It's only 8 pips between both of them, not a lot of difference. So if these levels are still there, then they are still holding, they are not broken, then this thing has a chance. Now, what about the resistance? After the recent drop, let's see if we can draw a trend line from the highest levels seen recently. Yeah, these levels, this trend line is still far. It's a little less than 200 pips away from current levels, so it's not doing us a lot of help. We want something that is closer to current levels, and that is, of course, something. For that we need to draw trend lines or horizontal support and resistance lines or retracements that are closer to current price levels. Now that's something. That is something. Let me just delete this so you can see things clearly. I think we need to use this down, right? This is a few pips higher. Just look at this, guys. We were dropping, and of course we started recovering. This recovery stopped extremely close to the 38.2 retracement level. Yesterday's American session high and the daily high were very close to that. The Fibonacci level is at 93.3, while the actual high was 94.3, only 10 pips above that. And you know, 10 pips on gold is like 2 pips on euro. You know, it's a very volatile instrument compared to some of the major currencies that I know you love. So that means that the price did stop at this resistance, and we can use it as a resistance. Unfortunately, of course, there is almost 100 pips between the support and resistance. So if you want to build a trading strategy for today, depending on them, the stop for any entry would be more than 100 pips. And you know what I think about that. If you think that the stop is very high, it does not fit your risk management and your account, then just let it go. Don't trade trading setups that are very risky in terms of pips. You know, when you are looking for a stop, this stop should be in the range that you prefer it to be. If it's larger than that, you have two options. You can let it go and look for another trading opportunity, or you can trade this opportunity with a smaller lot size. So what am I recommending here is trade these recommendations. Trade today's gold recommendations, REX I call them, with a smaller trading size. My suggestion is, instead, if you are usually trading one lot, make it 0.7 lot of a lot. Okay, so with this we can start building trading strategy. Maybe 7, maybe 6, it depends on you. Let me give you some freedom here between 0.5 and 0.7. Now, if we break above 1493.3, I want to be in. If we break below 83.5, I want to be in. Let's build this strategy. Buy at 1495.3, 20 pips. Stop at 1481.5. And as you can see, guys, we are almost 140 pips apart between the entry and the stop. That's why we really need to use maybe half a lot, because half a lot with 140 pips of stop is equal to trading one lot and losing 70 pips. What about the limit? We'll check that out, but first I want to target 1 and target 2. This is how I said I'm going to do things today. For my friend who suggested that yesterday, he says that this helps him more take control of his account. And okay, if you find that helpful, then I am going to do it, because I want to be helpful to you guys. Okay, so the chart is full. Okay. Now for the targets. We established the entries and the stops, but not the targets. I'm going to leave this chart, leave these text comments here, and switch to another chart. If you break above the retracement level here, then I really want to see the price testing higher levels. I'll be expecting that. My two targets are, of course, 61.8 and 71.4. I don't think we can place at 1497. That's not a lot. Yes, of course we can't. So I'm going to place my initial target at 1501.2. But I'm going to target much more than that in my second target. As you can see, guys, we have a resistance area above 1510. We have talked about this many times recently. We have many daily lows that are between 1510 and 1520. We're going to place this at 10 so you can see how many daily highs we have, or hourly highs and daily highs, of course, we have between these two levels here, 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 a lot. Now we can, make this resistance area smaller, and what I want to do here is I want to move this to the upside, look for other levels. In my own opinion, here it makes a good place, but then we do have other daily extremes that we need to care about. It's 1516. Okay, so now that is a target that should be placed on gold. Okay. How about if we move to the downside? If we break below 83, then the price could continue dropping towards the 70s, of course. We do have obvious support at 77. We talked about this yesterday. So 77 is going to be our first target. 1477. And that is, of course, not a lot of profit, but this is what you guys like. You want two targets, one very close and one not very close. Let me check if we have other support levels that can work as target number 2. So what I'm going to do here is I'm going to calculate the retracement for this whole gigantic move. Why are not we targeting any of these levels yet? Maybe this drop is the one that is going to target these levels. This is extremely very, very far. I'm not going to use this kind of limit. It is in the 40s. Of course, we can get there. There is no question about that. Especially that we have not corrected, not even 38.2% of the rising move from April bottom, which is of course something that most of the time is done. You know, when you have a strong move and then you see correction, most of the time, at least we reach 1/3. So we are, or the 38.2. We did not reach the 38.2 so far. But this is way, way far, so I'm gonna keep it. I'm gonna keep it closer than that, much closer than that. Of course, we're not gonna wait that long for our position if we initiate a short position today. Below 73, I really need to see it below 73. So I'm gonna, you know, once we get in the 60s, that is it for me. 1464. So there you go, guys. These are my recommendations for gold today. I'm going to keep them on the screen for a little while so you can take a look at them if you want to copy them. If you want to place them in your QTime FX account, go ahead. We have a long position at 1495.3 with a stop at 1481.5. Of course, we said that trade today's gold Rex with a smaller trading size. If you usually use one lot, use half a lot, or 0.6 or 0.7, not more than that. And that, of course, because of the larger than usual stop. The target, first target is 1501.2, the second target is 1516. Now sell at 1481.5, stops 1495.3. It's the reverse to the first recommendation. Your target is 1477, very small target as target 1, and a better target as target number 2 at 1464. This is it for gold, guys. Let's take a look at another thing. It seems like we missed it, guys. We missed it. The dollar yen is moving to the upside, of course. We had a long position yesterday. It was stopped with a profit. Stopped with a profit. When you hear stop, you say to yourself, well, did we lose money on this trade? No, we did not. We made money on this trade, but it was not as much as I wanted to make. Only 3 pips on a stop because we reached more than that. We could have closed with more profit, but of course we continued to update our stop until it was hit at a profit of 30 pips. And now, unfortunately, it seems like we have lost the opportunity because it has been rising since the beginning of the hour, and it's more than 30 pips above the opening price for this hour. So maybe we have missed the chance to reinitiate our long dollar yen position. And that makes me sad because I really wanted to get in below 109 on this thing. And I was thinking about it from the morning when I woke up. I said to myself, well, we're going to reinitiate our long position. When I saw that our first long position is closed with a profit of 30 pips, I said to myself, well, this is an opportunity to open yet another position and make more pips. But with this move that we have seen in the last 30 minutes or so, I don't know if we can. Nevertheless, let us talk about the analysis and see what we can do. Maybe we'll let it go. Maybe we'll wait for a better price to get in. Let's take a look at the chart. First thing I want you to remember is the wave count that we have provided yesterday. Yesterday we said that we have a 1, 2, and 2 almost retraced 100% of 1, which is of course something extremely usual. It happens all the time in wave analysis. And then wave 3, the monster, it is usually the monster, of course, and then a 3 waves correction to the downside. Yesterday we said that this could be or this could be the end of the correction. This is the bottom of wave 4 of 1 lesser degree, we thought, or here we thought that, yeah, reaching this level and then turning up is something good, especially that we have a 3 wave structure to the downside. And as you can see, guys, let me delete this trend line. We don't need it anymore. As you can see, guys, Currently, we are trying to overcome the falling trend line from the high seen a couple of days ago. On Tuesday, it connects, this trend line connects Tuesday high with Wednesday high, and currently we are trading, or we are trying to trade above it. Okay, this trend line for this hour is at 109.07. So if we get maybe 10 pips above that, we want to be in on the long side of the market. Buy at 109.07. Sorry, the resistance is 7. So 10 pips above that is 17. Okay, so along at 17, this is the first idea that I have in mind. Unfortunately, because we missed lower levels, if we were still trading below 109, that would be better for our long position. But sometimes, you know, you see chances slipping in front of your eyes, and you feel you miss something very nice, very good. But of course, these opportunities to trade are always there in the market. When you miss one, when you see a trading setup that you did not use, and you say to yourself, oh my God, I wish I was there at that time. But don't feel very bad, because it's a market. It will always generate trading opportunities. It will always give you trading setups, as long as you know how to spot these setups, how to use these trades. Okay, so don't be sad, guys, because we did not reinitiate our long position on the dollar yen around 108.70, 108.80, something like that. Don't be sad about that. We still have a chance, of course we do, to have another long position and close it in profit, just like the first position that we had on this pair earlier this week. So above 109.07, of course, we do have, pay attention to 109.30s. We talked about this many times this week. The 30s, a previous top and a retracement level, and everything on the chart says that 109.30s is important. Last time we got to 29, I think. Yes, we got to 29 just pips before testing this Fibonacci level and previous top. Let me switch to 4-hour chart. Maybe you will see it better. So this is from yesterday. We adjusted the limit, and the current stop was at 30 pips of profit, and unfortunately it was hit. I'm going to delete this. We don't need it anymore, but I want to show you why the 109.30s is important in a minute. I'm not going to spend much time because we talked about this many times this week, but if in case we have people who are just joining us, the retracement levels for the drop from April top shows that the 109.30 is the 30s, is the 61.8 Fibonacci level, and here we have something that confirmed, really confirmed the importance of this level. When we were rising, we got to the 109.30s, and then we absolutely collapsed to the downside. And then later we came back to test this level. We got to the 20s here, and again to the 20s here, very close to the 30s. So 109.30s, absolutely a resistance that we need to keep an eye on. It's very important. But when we buy at 109.17, of course we cannot in the 30s. You want me to place a limit at 20 pips? Well, okay. Target one at 109.38. It was 38 actually, so our target from the first position. So it's 21 pips of profit. Okay, but of course that is not a target that gets us very exciting. Target 2, let's look for something more exciting than that. Keep this recommendation here, and We do have in the, remember, of course, from yesterday we adjusted our limit to 75. So is 75 good enough? I don't know. I'm gonna, no. I'm gonna use something more than that. I'm gonna use 71.4 and see if it is an important level. 1013, we also had this as a limit in our minds for our long position. And yeah, this is the recommendation. Of course, we need a stop. So we're gonna place a stop for this. We're going to place a stop for this, and that is, of course, it needs to be below the immediate support, which of course we are going to look for right now. So the support, where is the support? In my own opinion, after this recovery attempt, if we go back below the overnight low of 108.62, then that's it. Because if we continue to trade here, we would be looking for another support. But after such a recovery attempt, we need to hold on above the bottom, the previous bottom, in order to start, or at least try to initiate, a sequence of higher highs and higher lows, the definition of a rising trend. So if we do that, then we have a chance to the upside. But if we start trading below the overnight low, then the sequence would be lower highs and lower lows, and that indicates weakness. So it is really enough to, 10 pips below this at 52. Yeah. And I'm gonna use the same levels as entry and stop for the short position, but I'm gonna look for targets right now. Okay, guys, so this is the entry and stop for our short position. No, it's not a position yet, it's a recommendation. And if we start trading below this one, then the bottom of wave 2 is usually, of course, the end of a correction. Although it's very, very low at this time, I'm going to still use it's very low, of course, in LU terms, not in PEP terms. In PEP terms, it's not that far. But in the wave sequence, it is very close to the beginning of wave 1, very, very low. If we have correction that reaches this low, then that might even lead to lower levels. What about these lower levels? $754, the 750s has always been of interest to me. So 54 or 55 is the Fibonacci. I'm going to make them around 100 pips at 107.52. So these are my $yen recommendations, guys, for now. gonna keep them on the chart for you guys. Before our second break, I'm gonna leave them on the chart so you can read them, you can copy them. You can see if these recommendations are good enough for you, for your trading strategy. Buy at 109.17, and as you can see, touching this trend line is causing the price to fall. So if we go 10 pips above this trend line, it's 109.17, that's our long position. We need to pay attention to the 30s. That's why our first target is very, very small. As you like it, guys, 109.38. Our stop is 108.52 and our limit is 110.13. And let me round this up. It's only a matter of a few pips. So you will be very unlucky to see 10.13 but not 10.17. So 100 pips on the second target here, 100 pips on the second target here. Smaller targets on the first target, 107.82. Here it's not very bad, but here it's very, very small. The stop for each entry is the entry for the second recommendation, the other recommendation. So if we buy at 109.17 and we are stopped at 108.52, we initiate a short position at 108.52 with a stop at 109.17 with these limits. Remember, guys, all of these recommendations should be placed there, and we should pay attention to the market when it gets close to the entry levels. And we should believe in them, all of them, the buy and the sell. To some people, they want to take sides in the market. But what I prefer to do is I prefer to let the market pick the side that I'm going to join this day on. So today I opened the chart. I looked at this. This is the resistance. This is support. If we break above the resistance, then I'm going to be with the bulls. If we break below the support, I'm going to be with the bears. And of course, the skill here is to specify the important support and resistance levels, and then that's it, guys. You need to follow the break or the failure to break, of course, of these important levels. And if you specify the levels correctly, if you know where are the good levels in the market for today, then you can trade successfully. And this is what we are hoping to do here. We hope that we identified the right support, the right resistance levels, and this is why we built this trading strategy around them. Okay, around the support is 109.7, and the resistance is 109.7, the support is 108.62, and 10 pips above the resistance we want to be in on the long side of the market, 10 pips below the support we want to be in on the short side of the market. And let's hope for the best, guys. The last dollar yen trade was a winner. We hope to repeat that with another win on the dollar yen. Fingers crossed. So with this, we come to the time where we are going to take our second short break. It is already 2 hours. I cannot believe this, guys. I enjoyed every minute with you. I thought that that was 30 minutes or so, because it was very enjoyable to have you with me and to the market with you guys. Any questions, any requests? I'm gonna take a look at any market that you want me to take a look at, and of course we are going to include the main instruments. So see you in 5, guys. And of course, let me remind you that this webinar is sponsored by QTime FX. Very, very big thanks to them. See you after the break, my brothers and sisters. Okay, guys, we are back. How's everybody? How are you doing? How was your break? I hope you had enough time to take a look at the market to see what is happening. Both the euro and gold, the instruments that we have already analyzed, are trying to recover. They are still trying. Let me just show you what is happening after this sharp drop on gold. Now the price is trying. Same thing on the euro. It is trying, and of course it touched it's not only touched, it is now currently above the falling trend line from Monday's American session high, which is something good. I like that. Hello, how are you guys? How's everybody? So with this, of course, we still need the euro to start trading above the moving average band. You know, this is good, but it's not perfect. We still can start falling we can start falling at any time. We need the price to trade and hold above the moving average band on the hourly chart, which is very close. Of course, it's very close, and we can do that very soon. If we have just a little bit of a push to the upside, that would be good enough. Okay, guys, so other instruments. What are we going to talk about today? We talked about gold. Now, what about I want to talk about things that we did not talk about for a couple of days. Yes, the Canadian dollar, an instrument that we did not talk about much recently. We had, of course, we talked about it before, but this week we did not give a lot of attention to. So let's start with the daily chart, as usual. And the first thing that I can see on the daily chart is that the price has been trading below the moving average band for a number of days, and today's current high is an exact touch on the bottom of that area. Just take a look at this. We're talking about maybe 1 pip difference between the both of them. So this in itself is not something that the bulls of this pair are going to be happy about. We are finding resistance around the moving average. Now, what if we draw retracement levels for this move and see if the current daily high or recent highs have been very close to retracement levels? And I knew it even before I picked the 50%. It looks like a 50% thing. So the 50% is at 31.95. I continue to believe that this is an important resistance. I'm sure we mentioned this resistance before. Now we are back to this resistance. We talked about it late last month. We touched it in a stunning way on Friday. The high was 96, the level was 95. Imagine that, guys. Yesterday the high was 93, and today's current high is 99. I think it's obvious. Even if you don't know technical analysis, when you see these daily highs that are extremely close to 95, you know that 95 is the resistance to us. So hands down, it's a very easy win for 31.95 without a lot of effort, without a lot of competition. So resistance, I'm going to put this on the chart for you guys immediately. Resistance is at 31.95. Now what about the support? For the support, of course, we need to go to lower
time frames, 4-hour. Obviously, we are facing problems around 95. Just look at this, guys. Look at these candles, these recent candles, the last 5 4-hour candles, which means, of course, the trading for the past 20 hours or so. We cannot, we cannot neglect the fact that 31.95 is the star resistance for now. And not only that, we are getting good bearish signals from stochastics and RSI, as you see. Now, I need a support that, if broken, I would feel that it is good to initiate a short position. We do have a support in the 30s, but I do not want to wait that much because we do have signs of weakness around here, very, very obvious signs of weakness. So taking a chance on the bear is something that makes a lot of sense, betting on the possibility of going lower with a stop above 31.95 sounds like a great idea. So what I'm going to do right now is I'm going to short the Canadian dollar. Immediately we are in. Okay, guys, so we are in on the Canadian dollar, a sell. We sold at market, so sell at market. Sorry about that. Sell at market. Now the stop should be obviously above 31.95. 31.95. It's Canadian. I use around 30 pips away from the important levels, so I'm going to use 32.25. This is the stop. Now I want a limit that reflects the bearish possibilities that we are seeing here. Our entry level is at 72.7, so 72 to 32.25, that is around 53 pips. Yes, it is 50, almost 53 pips. Now I want the limit, of course, to be larger than that, and I really believe that this thing has a chance, but we have one hurdle that we really need to overcome, and it's this rising trend line here. Just see, guys, just take a look at the way this trend line moves and the moving averages, or this moving average moves with it. It's fantastic. They are moving very closely to each other. They are creating the kind of support that we technical analysts love, because when you have more than one reason to believe in a support or resistance, that means it is more important. And here I do have 2 reasons to believe in this trend line. Of course, the trend line is one of them, but I have confirmation from the moving average, simple moving average 49, one of my most favorite moving averages. And they are currently running extremely close to each other in the 31.30s. I need to overcome 31.30s. It is a must if we want to make the kind of profit that we are looking for on this trade. The most recent recovery attempt started at 30.37, okay, and we moved more than 150 pips up from that. We have 32.08, so we're talking about more than 170 pips, guys. 170 pips from this low to this top here, and now maybe that's it. Why am I saying that? Because we topped extremely close to the 50% level, and we have been trying for a number of days to overcome the 50% level, the very important resistance 31.95, and failed. So the bulls now need to admit that they have failed to break above 31.95. If we don't have really big news that can favor the dollar today, I think the Canadian will take control of this market. And
when we stop at such a key retracement level, usually it makes a lot of sense to expect that the price will at least test the previous bottom from which the recovery attempt started. And in most cases, it's not only a test, it is an actual break below this bottom. So for me, I'm gonna settle for testing this same bottom, 30.37. Market, let me just say we sold at 31.72.7 if you want to be really, really exact. This is the price that we got in at. Our target, and let's see if this is going to be the first or the second target, is 30.37. No, it is the second target. It's enough. It's more than enough. We are talking about 135 pips. That is enough. So I'm gonna use this as target number 2. What about target number 1? Do you think that 31.30 is target number 1? Even no, I want it to be a little less than that. How about the most recent touch of this trend line, which is 31.07? Yeah, that makes a lot of sense. So this is my recommendation for now, guys. It's not a recommendation. We are already in. We got in. Okay, we sold at 31.72.7. Our stop is 32.25. Our initial target, or target number 1, as you want me to put it, is 31.07. Our target number 2 is 30.37, a more ambitious target for this short position. So this is it for the Canadian. I really believe that the bears have a chance, given that 31.95 will continue to be the kind of resistance that it has been for days now, for more than a week or around a week, something like that. 31.95 has been causing all sorts of problems for the bulls, and now it is time for the bears to take advantage of that. The bulls tried once, twice, 3 times to overcome 31.95. They failed. Now it is your chance, bears. So get in, push the price lower, and make some money. And this is exactly what we are trying to do here with our short position, which we took at market immediately at 31.72. And we are hoping for the best. Keep your fingers crossed. Let's hope for the best. Okay, so the Canadian, it was an easy analysis. We didn't spend enough time on that one, and we can move to another instrument. Let's talk about the what I want to talk about things today that we did not talk about for a while, because it's the same regular 4 or 5 instruments every day, and that's great, of course, because you can follow what happens on a day-to-day basis on these instruments that I know most of you guys love and care about so much. But it's a huge market. I would love to spend some time on other instruments. That is what I'm trying to do. Right now, we do have a short position, by the way, on the Aussie, and it is in a little bit of profit. Let's see if that is still expected, if it's still expected for this instrument to achieve more profit, or it's a very small profit, by the way, a matter of 10 to 20 pips. This is what I have been seeing happening on this trade so far. Let me start with the daily. No. Well, you guys, with this look at the daily chart, I don't think that we should keep our short position any longer than that. Why am I saying that? If you are following what I'm trying to explain here, we have a falling trend line from the beginning of last year. This is extremely similar to what we have on the euro. And this trend line, although it has not been touched so many times, I still believe that it looks good enough. And now we are trading above this trend line. However, in recent sessions, we talked about the importance of 69.95 as a resistance. Remember that? Was it 95? 68, 95. Yes, 68.95 is the resistance that we talked about so much. So resistance 68.95, the previous top. This top, of course, I'm talking about this one. We tried to break here. We came very close to here, and it proved itself here with it was an area, to be accurate, between the 80s and the 90s. And now, yes, we are in the 90s, but we have not had the kind of break that we want to see on such an important resistance. We placed a long position. That this is a recommendation from last week, I think, at 69.05. The price reached maximum 69.30, a maximum of 25 pips of profit. Of course, this is the Aussie. We're not talking about an instrument that moves 500 pips a day. We are talking about an instrument that moves maybe 1/10 of that a day. So 25 pips, that was not very bad for an instrument that is usually calm, usually has a limited range between the high and the low of the day or the week. So after that, this is the important thing. What will happen after that? For this, I will need to switch to the 4-hour chart and hourly chart and see what is happening. As you can see, guys, this is the trend line from the daily chart, and as you can see, it has been providing support for a while now. This is a 4-hour chart. Just look at these levels there. These lows, these candle lows, that are very close to the trend line. Here we also have lows that are very, very close to this trend line, and then we started recovering. And this is bullish, of course. This is bullish. So I want to take a look at this trend line. Also, the bulls are trying to break above the falling trend line from Tuesday's high, and they are doing well. They are doing well with that. They are trying very hard to break it. I can adjust this. Can adjust this. Okay, fantastic. We have the moving average band and the trend line very close to each other. And the resistance, the actual resistance, is at 91 here. And of course, we have the 95. It's very, very important. So if we break the 95, a long position would be 100% justified. And that brings us back, of course, to our initial or last week's recommendation of buying 10 pips above 68.95. And that is, of course, this one. This is the recommendation I'm talking about. Here it is. Buy at 69.05. Stop at 68.38. We'll, of course, we'll update the stop and the limit. The limit, I don't think we need to update it. It looks fantastic from here, but maybe we can find a smaller stop than this for the Aussie. It's not very volatile. We need smaller stop. We need a smaller stop. Actually, it is preferred to keep it where it is, because we have seen 50s recently, and if we want to place the stop 20 pips below this one, we will end up with the 30s again. So I'm not gonna change this in any way, guys. I'm not gonna change this in any way. I'm gonna just take the recommendation from last week and then use it again today. Buy at 69.05, stop at 68.38, and limit at 69.83. But maybe we can find another a target. So I gave 2 targets for every recommendation for today. I'm going to try to do that with the Aussie as well. So guys, what I was trying to do here is, of course, to take a look at a level, to find a level that can work as an initial target for our long position. And I want to show you this one. We have a level from July that I'm really interested in. This is, the low here is 53, 69.53, and here 69.54. So I'm going to use 53 as my limit. Now this looks like a very interesting trading recommendation. Okay, buy at 69.05, stop at 68.38, target 169.53, target to 69.83. Okay, this is my recommendation for the Aussie for the day. You can keep it, you can screenshot it and maybe use it later in your trading for the rest of the day. Okay, guys? What else do you want to take a look at? I'm still looking for things that we have not talked about for a while. How about the pound yen? The pound yen is one of the instruments that a lot of traders like, and they like very much because of the potential it gives them with sizes of movements that look extremely attractive to traders. They see this thing moving 100 pips in an hour or so. Sometimes the daily range is 300, 400. I remember a day that it was more than 1,000. I'm not talking about Brexit, I'm talking about way before. We had a day on this thing that I think if my memory serves me well, we had a day that this instrument moved around 1,200 pips on a day, on a single day. Okay, so that is why a lot of traders like this instrument. We did not talk about it before, and we are going to talk about it right now. The first thing, of course, I'm going to take a look is the monthly chart. I'm going to remove all drawing tools. I'm going to use my indicators. I'm going to guide you through what I do step by step, okay? So let's start with the monthly. Why am I starting with the monthly? Because I have not seen the chart of the pound yen for a long while, for a time, many weeks, I think a few months. It is really really risky, really scary. So it's not something that I trade every day. On the monthly chart, we see the first thing that we note is that the price is below the moving average band, and yes, this is good. So on the monthly chart, we do have a support at 25.86, harmonic support. This support was tested twice in October of 2016, and then again a couple of months ago in August, when the price dropped to 26.55. 26.55, the support is 25.86. We're talking about 70 pips of a difference between the actual price bottom and the retracement level. But of course, we are talking about a monthly chart, so that is okay. It's not something that is way far. We're talking about a monthly chart here. Keep this in mind. So the first thing that we need to keep in our minds is that we are now recovering from an important support. We approached an important support. We started moving to the upside. We were trading in the 20s this summer, and now we are trading in the 40s. That is a very, very good move. However, we still have a lot of work to overcome this downtrend. At least this part looks perfect for a short-term downtrend, or no, not short-term. This is monthly chart. I forgot. For a long-term downtrend, this looks perfect. That's why I'm going to switch to, before I switch, I want to just take a look at the indicators. As you can see, the stochastics managed to generate a buy signal at the right time when the price started recovering from the harmonic level to the upside. And if you did follow this trading signal from stochastics, then I really believe that you will be very, very happy by now, because the price in October, we opened around 32, 33, and we got as high as 41. So we're talking about more than 700 pips, very close to 800 pips between the open and close of, between the open and the high of October. If you use that, kudos to you, but we are looking at this for the first time in a while, so we did not use this opportunity. We were not following this instrument at that time. I'm going to switch to the weekly chart. And as you can see, the weekly chart, of course, reflects this recovery attempt from the low seen earlier in the summer. We are moving to the upside, and the stochastics is moving to the upside. The RSI is moving to the upside. The MACD generated a buy signal a few weeks ago. So everything looks perfect for this instrument to continue moving higher. One more thing that supports the bulls is the fact that on the weekly chart, we did penetrate the moving average band, and we did hold above this moving average band for the past 2 weeks, maybe 3 weeks. We'll see what happens this week. If we close above it for a third week straight, that is a strength sign. Now, what about the daily chart? The daily chart now is telling a different story. So now what we see here is a recovery attempt that looks a lot like what we saw on the pound, on the cable, the pound against the dollar. It looks really, really similar to that. But recently, we have been stuck in a horizontal trading range. Let me define this trading range so we can talk more about it. And as you can see, of course, with this very strong move to the upside, everything got into the overbought, the stochastics, the RSI, everything. Now, recently, we have been trading between a low of 38.88 and a high of 41.51. So 38.88 and 41.51. These are the levels that you need to care about for now. I know that they are far from each other, more than 250 pips, but you know, this is the pound yen. 250 pips between support and resistance is something that is not really strange when you are analyzing the pound yen. If you are looking for the direction of the next big move, I really believe that you will need to wait for the break of one of these two levels. If we break above the top of this range, I really prefer to go long. If we break below the bottom of this range, I really prefer to go short. Very simple analysis techniques, guys. As you can see, it's very, very simple. We are using things that have been used for more than a century, but they are very simple to a degree that to some people, they say, well, is this how the market moves? We're not going to talk about really important stuff. We're just talking about support and resistance, and that's it. Yes, that's it. That is it, guys. You don't have to complicate things to be successful. What you need to identify is the support and the resistance that are really, really important. And when they break, you follow the direction of the break. Very simple technique. Now, with more than 250 pips in between, I understand if you want me to find you closer levels. Of course I do. If you draw a trend line from the highest price seen recently, actually it is the highest price seen for a while, for 5 months. Highest price seen in the past 6 months. It was seen maybe a month ago, so less than a month ago. So it was the highest price for 5 months at the time. If we draw a trend line falling down from this high, I really like this trend line. Let me show you why. 1, 2, 3 touches with fantastic accuracy. Okay, this trend line is currently at this exact time is running around 40.60. So 40.60 is an important resistance. Now, what about the rising trend line from October 16th low? If I can adjust this, let me adjust it to be more exact. Just like this. Now, this rising trend line is currently running at 29.25. Of course, both of these trend lines are going to get closer to each other with time. As time passes by, less of a distance between these two trend lines is going to appear on the chart. It's going less and less and less. And that, of course, is going to help us because we want the support and resistance to be reasonably close to each other. I don't want them to be very far from each other because that would leave me with what, guys? With larger stops. If I want to use the break of one of these two trend lines as an entry and place the stop beyond the other trend line, that would leave me with a large stop if the distance between them is large. But as the distance gets smaller and smaller, of course, my stop will be smaller and smaller. And as a trader, of course, I prefer that to happen. So I would really like it if we spend more time here until these two lines get closer and closer to each other. But at the time, resistance is at 40.60 and support is at 39.25. We are still 135 pips between the support and resistance, but it's of course better than having more than 250 pips between them at the top of the bottom, at the top and the bottom of the range. If we use the trend lines as support and resistance, that would leave us with 130 pips in between them easier to build a trading strategy with this distance compared to around 270 pips if we use the top and bottom of the range. So this is it, guys. With a break above this trend line, I think that a long position would be extremely justified, 100% justified, because the overall picture is, of course, just look at this. You can understand or explain this horizontal movement as a pause after this very strong move to the upside once we break above the rising trend line. But you can view it as an opportunity for the bears to attack and reverse the direction of the market if we break below this trend line. So in my own opinion, it is all about these two levels. I would not hesitate to get in the market in the direction of the break once one of these two levels is broken. Okay, now let's talk about the bullish and bearish possibilities. What about the targets? What about where can we wait for this thing if we start moving to the upside or to the downside? We're going to look at that. You know me, I love retracements and retracements love me. They have been very kind to me. Some of my best trades ever throughout my whole career were trades using retracement levels. I used retracements to initiate trading positions, and that worked very well. So the next retracement after, or the first retracement above the top of this range, is the 71.4 level at 42.5. So 42.50 upside targets, let me call them. $42.50 is one. Let me see if we have something else here. How about the horizontal? It cannot get more obvious than this. 43.70s here, 43.80s here, 43.70s here, 43.70s, obviously an area that we need to care about. 73 here, it is 76 here, 74 here, so call it, it's only 3 pips between these session lows, so it doesn't matter if you place it at 73 or 76, it does not matter. Okay, these are my upside targets for now. Now, what about the downside targets? If we break below 39.25, then a retracement of the previous move should be expected. And you know me, of course there's a large number of retracements, but you know me, I focus on a small number of retracements. One of them is the 38.2, which is at 37.28 here. And I really believe that the 50% will be more attractive. I'm going to show you why I believe so. Because if we draw a horizontal trend line at the 50% level, you can see how close it is to this price top here. So the 50% level is at 35.97, while the highs seen in September monthly high actually, in the 35.60s here, 35.70s here, 76, and this one is 97, 21 pips between the actual price high and this key retracement level. And that of course is nothing when you're talking about the pound yen. That is within what we accept, what we are willing to accept. And that of course indicates that we do have an important support around 35.97. So my downside targets, not upside targets, are
Downside targets are 37.28 and 35.97, and I'm gonna place a star here. It is a 5-star level in my opinion. So guys, this is it for the pound yen. I'm not going to issue a trading recommendation for it today, but I'm going to keep these numbers on my chart. I'm going to keep them in my mind. I'm going to save them and wait for a break. Okay, wait for a break of one of these two levels. If we get that break, then in my own opinion, we can initiate trading positions. The resistance is 40.60. I really believe in it. We are not very far from that, guys. We are currently in the 14 teens. So we're talking about 45 pips to the upside, and we will be at 60. The support is at 39.25. We are a little less than 100 pips above that level. We can still, of course, go either way. 100 or 60, they are not very far for the pound yen. That can be reached within the next hours or so. So what I want you to do for now, if you are interested in trading this pair, is to keep your eye on 40.60, keep your eye on 39.25. When you decide that one of them is broken, I recommend going in the direction of the break, opening a position that is in the direction of the break. Break 40.60, and the price will be expected to move to the upside. Sorry. Of course, we have. I'm going to update this with the range top. Range top was at 31.50 or 41.51. Sorry, and we do have the range bottom, of course. We're going to check that out. So when we start trading above 40.60, the first thing that we need to care about is 41.51. We might just get to 41.51 or very close to it, just a little bit below it, just a little bit above it, and then start falling again. But if we continue moving to the upside, we will start targeting our 42.50 and 43.70s areas. These are the targets that I really believe in. We need to keep an eye on these targets, but on the way higher, if you buy above 40.60 and you see the price touching 41.51, keep your eye on the price action around that area. If we are doing well around that area, then the price will be expected to continue moving to the upside. But if there are signs of topping around 41.51, that happened before here, guys, and here. So don't take it as it's nothing. No, it's nothing. The price will continue moving higher. No, if we top around 41.50, then you need to close your position. And of course, by then, your long position above 40.60 would be in profit. If we reach 41.51 or very close to it, you would be in good profit. And that, of course, will make it easier for you to close, because as human beings, we always find it difficult to close with a loss because of what we call hope, something that, you know, is sometimes it is not built on reason, and that is that's very risky if you are a trader. If you are the kind of trader that always believes in hope, and I'm holding to this trade on hope, that is very risky. That's not the right way to trade. Sometimes, of course, we hope things to happen with a reason to believe in this hope, and that is a completely different story. If the chart is supporting that the market will continue moving in the direction that you want it to, you will hope that to happen, but of course you hope that with a reason on the chart. This is different. So in all cases, guys, above 40.60 we buy. If we get very close to 41.51, we look for price action signs. Signs of weakness, we close. Signs of strength, we keep, and we hope to reach 42.50 and 43.73 or 70s in general. Now, What about the bearish scenario? Well, if we break below 39.25, this trend line right here, then a short position would be absolutely justified. And if this happens, of course, we need to pay attention for the bottom of the range at 38.88. I'm gonna update it here, 38.88. I'm gonna update it. So with the sell, of course, there's not a lot of difference here. The distance here between the trend line and the top of the range is larger than the distance between this trend line at the bottom of the range. So between 39.25 and 38.88, not a lot of distance. You need to pay attention in this area, because when you have two support areas very close to each other like this, that might be a strong support area. If you sell because we are trading below 39.25, you need to keep your eye on 38.80s. If we get there and we start showing signs of strength, then close it immediately. Even if it's not making you one single pip of profit, close it with a small profit, 5-10 pips of profit. Or even if you got in a little bit later and you are losing 5 or 10 pips, if we find signs of strength around 38.88, then you need to close it. But if we got away with a short position that is penetrating 38.88, then that would be fantastic, because the next target is 160 pips below that, 37.28. And actually, this is not my favorite target for this drop, because 35.97 looks like a fantastic target to the downside. That's why these stars are here, to indicate that this is really an important level. I really believe in it. If we break the range to the downside, of course, if we got to 37.28 and signs of strength starts to appear, I have to admit that that's it. But if I was short below 39.25 and the price continued falling to 35.97, that is my favorite target. That is the target that I'm keeping in my mind, hoping to reach. And of course, down the road, I'm going to keep looking at the chart. But from where I stand right now, it looks like absolutely the favorite downside target. Absolutely. With this, guys, it has been fantastic talking to you for another day. I hope we are going to do this every day. I want to see you all here every day. I'm happy to spend this time with you. I'm happy to discuss the market with you. Any requests will be, of course, considered. And we started with the two target method. So two target method is now going to be used, because that is, it's some kind of a request or a feedback from one of the viewers that has sent to me yesterday. And you see, I love hearing what you have to say, and I love taking that into account when I do these sessions. With this, guys, it has been fantastic, and we spent 3 hours today together having fun with the market. I really hope that the information presented today will help you trade better, will help you identify the important support and levels in the market for the instruments we have been talking about all day, and that will result in good trading results for you. I really hope so. With this, guys, we come to the end of yet another webinar hosted by FX Educast and sponsored by QTime FX, our favorite broker in the whole world. QTime FX is offering you fantastic spreads, guys. Absolutely fantastic spreads, and with zero commission. This is the great thing about it. You don't have to pay commission because you are getting a very attractive spread. That does not mean that your broker should force you to pay commission. No commission here, guys. Great spreads, zero commission, and to top that, we are offering you $500 of withdrawable, real, actual green money. Not a trading credit, guys. It's not a trading credit that you can trade with, but you can never withdraw. No. This is green. This is the money
You know, this is what you can withdraw, $500 of withdrawable free bonus. All you have to do is contact us at fx_educas via Telegram, and we will be here waiting for you, waiting to help you with everything we can in order to open your account with us so you can start trading the real money. As I said many times, trading demo is good for a while, but after that, if you don't trade real money, you are not learning. You are not feeling the real feel of the market. Do you want to waste your time without feeling the market? I don't think so. So come on, contact us at fx_educas via Telegram. Let's open this account for you. Let us give you this very generous bonus. QTime FX wants you to make money. They are offering you fantastic spreads, zero commission. Anything you want, just be a successful trader. And of course, not only that, they are offering you these trading sessions that help identify the most important levels in the market so you can build your trading strategy on the breaks of failure to breaks of these very important levels. With this, guys, I really want to thank each and every one for being here. It has been a great webinar, and I really hope that the market will be moving in the direction that will cause you profit in the next 24, or let me say 21 hours until the beginning of the next webinar. And tomorrow we'll be talking about more trading opportunities, more setups, more important levels, all the information that you need in order to establish positions in the market that can achieve you profit. So thank you very much. Have a great day, evening, night, whatever it is, wherever you are watching this from. And as I always sign off, good trading and good luck. Thank you very much for being here, guys, and see you again tomorrow. Bye-bye.